I think economically the deals are obviously very good margins from a borrower perspective, but we still see documentation being pretty tight with LMA-based loans, even for alternative debt funds, and appropriate covenants in there. So, and we're not really seeing significant leverage above probably 70-75 is probably the maximum we see for a stretched senior loan. And maybe up to 85 for a mezzanine loan. So it's not really the ultimate, depending on your view of values, it's not really the ultimate sort of high level of leverage we used to see before. I think slotting has helped, because if a bank goes above a certain level, then it has an additional capital cost to the loan. So there's a natural constraint there. The alternative debt funds have clearly been doing different types of deals because they need to maintain their distribution yield, but equally they're to a degree constrained by their own constitution as to the types of loans they can do, and the insurers necessarily are going to take a prudent view, and also from a Solvency II perspective they need to try and satisfy what's called matching to reduce the capital cost of the loan, which means that there needs to be a very fixed maturity date, they need to look very carefully at covenant, and there needs to be a full spends clause, etc. So I think although we're seeing margins, the effective cost of debt low, and obviously with the German banks it's particularly low because of the Pfandbrief loans, etc., we're not seeing what we consider to be necessarily too aggressive loans at the moment. We're not seeing many speculative loans per se, other than perhaps in the context of residential, where often the lenders are syndicates of retail investors sometimes, or high net worth investors. There is a slight concern that more and more alternative lenders will change the dynamic as and when the market turns. More life companies will be exposed to real estate, and there could be some systemic issues there in terms of the too big to fail, and that also the alternative debt funds will behave differently culturally than some of the clearers at the time of the last crisis.